Hello, everyone. Hello, hello, hello. It is Monday, and we are excited about it being Monday and December the 8th, and wanted to get some levels plotted out for our day, our trading day today. So, first up, take a look at the disclaimer that we have there on the screen. Remember that I'm sharing information that I am currently applying to my trading and really taking a look at how I approach the markets each and every day. This is not financial advice. I'm just sharing what works for me, and gives you an opportunity to do your own investigation, your own research, and apply it to how you desire to trade as well. So that's that. Let's go ahead and jump into the charts and not waste much time. So let me go ahead and let's go. As always, we will start on the 4-hour chart. I will remove all of the drawings for the tickers that we'll cover this morning. And just to go ahead and get that taken care of in advance. For those that are joining for the very first time, I use the volume profile, and I use the volume profile based off of the visible range, collecting data over several weeks and allowing those to plot out what we refer to as high volume areas or areas where business was transacted. And so I use those as my balance areas, and I trade off of those areas based off of how the market is moving, the trend, and really the price action that occurs once it gets into those ranges. So that's just kind of a quick overview. If you want to learn more, feel free to leave a comment and we can take it from there. So let's take a look at the triple Qs. Let's go ahead and take a look at what our visible range volume profile is showing us and go ahead and plot out some of our levels. So we closed last week around this range, so we want to make sure that we capture the the areas around where we closed the previous week, and so we can capture those. All I'm doing is drawing zones around what would be the areas where business was transacted. So these are high volume nodes. I want to capture those. I want to call your attention to something as well. The pre-market is opening higher than where last week closed up. And so let's take a look at making sure that we have enough levels to trade from or trade and observe as we open up our time together and open up the trading sessions this week. So we have a couple that are above, couple zones that are above where we closed last week. Let me go ahead and capture this zone that's right underneath where we closed last week. And then also I want to capture this big zone right there just as a point of reference. If we were to trade down into this area, I want to know what's going on in this range as well. So that's that. So that would be, kind of the zones that we would observe, and we would drop down into the 15-minute zone time frame in order to observe these zones and to give us more of a place to find our entries and exits. And if you want to fine tune even more, you can drop down to the 5-minute or 3-minute. I typically stay at the 15 just so that I can avoid some of the noise at the lower levels. But also, I want to capture some of the swing lows and swing highs where liquidity might be residing. So let's go ahead and capture this wick right here. I also want to capture the nearest swing low, which is right here. And so those would be liquidity zones or areas where I would be looking to see if liquidity is currently sitting. And I would leverage the level two time and sales, or in my case, I leverage a heat map software called Bookmap that allows me to see where orders are sitting in the order book. So that is triple Qs. These are the areas in which we are looking to observe throughout the course of the day. We can see pre-market has us on the top end of this zone because of this orange dotted line that corresponds to the pre-market. This is currently where we are, 28 minutes out from the start of the market. So I wouldn't be looking to get in at this level. I would be looking for a pullback into the lower 50 percentile range of the zone, or waiting until we pushed up into the next zone and looking to see how the market responds once we get there. Once we get there. So that's the triple Q. Let's go ahead and take the 4-hour look at SPY and go ahead and capture these zones as well. Had a pretty good week last week. The zones are continuing to work. One of the points that I want to remind you of is if you are looking at taking or kind of placing trades, beware of average trade range, which simply means the distance in which a particular stock ticker typically moves throughout the course of a trading session. And if you get to the upper range of the trading range or average trading range, you want to be mindful of that because you may not necessarily get some of the moves that you anticipate or that you desire to get. You might not get many more opportunities once it gets into the upper range of the average true trading range for a session. So just kind of a point of interest and a point of just kind of notification there as well. So here are our zones for SPY, and SPY is looking at, if I zoom in a little bit, we see our orange dotted line, which indicates the pre-market level. We're in the upper end of this zone, so I wouldn't be looking to take any moves at the upper end. I would be looking to see what happens once we get outside of that particular zone. And as I zoom in, I see we have a little bit more volume here. So I want to capture this area right here. So I would be looking to maybe wait until we pushed up into this area and see what price action does from a response standpoint there. So that is the SPY. Let's go ahead and take a look at our swing high. One is there. Let's take a look at a swing low. We can go down here as potential liquidity areas to keep an eye on. Let's go ahead and pivot into Microsoft. Microsoft takes us over to this level. We're on the lower end here. Let's take a look at capturing, once again, these various zones. You see how my rectangles tend to encompass the entirety of where these high volume areas are located. And so we got those two captured there. The next major one, I mean, I guess I could capture some of these smaller ones, and I may go back afterwards and do so if this is a ticker of interest for me. But the next major one is right here. And so I'm definitely going to capture that one. And let's see if there's anything else. Anything to the downside? Yeah, we have a couple to the downside here. I had to pull back and go back further in the data to be able to get to a Microsoft level that's below where we were recently trading. So sometimes you have to do that, and you can capture these volume areas here. So that gives us some targets if we were to trade lower. But I'm going to kind of zoom in again here, and we are currently trading on the upper end based off of the pre-market. Orange line is here. Pre-market is in the upper end of a zone. Once again, I don't like trading in the upper ends of zones. I like to get entries in the lower 50% area of a zone before I take a market long, or in the upper end of a zone if I'm taking it short. So that way it gives me the potential for a full rotation between the upper part of the zone and the lower part, or the lower part to the upper part. And just that's part of my trade strategy and framework, and it aligns with auction market theory there. So that's that from a Microsoft perspective. There's a swing high. Here's a swing low, and we'll keep an eye on those levels. Once the market opens, let's go to Apple. Apple. We have a pretty significant node here. So we'll capture this entire node, and that would be a zone to keep an eye on. We have this zone where price closed at last week. We have the pre-market, which is pretty much trading at the lower part of that zone, and that's cool. Let's go up here and capture this upper zone here. And once again, the zones are more of an art than a science. And so you don't have to have exact levels, but it helps you to have some guides. And that's all that we typically want. So let's go ahead and I'll capture this small node there. I'm gonna capture this small node here. And we'll leave it at that for right now. Let's go ahead and capture swing high. Swing high is here, about 288.65. Let's take a look at the swing low here, right around this level, which is close to where we close. So what's the next swing low? Let's go down to about right here, um, and use that as a swing low. So that is Apple. Let's go ahead and capture Google. And for those who are wondering, I mark up multiple tickers. That way, I have multiple stocks that I can evaluate and review throughout the course of the day. It keeps me out of trouble from forcing a trade if I only was following one ticker. But you do have the ability to just say you want to focus on one stock or one ETF and utilize that ETF or stock as the basis for identifying trades. You just have to be more disciplined to be able to wait until your setup happens. Once again, getting into these zones. But for me, I oftentimes have multiple tickers at least charted up, and it allows me to be able to look and observe multiple stocks or ETFs throughout the course of the day and look for setups across those and those that meet my criteria, breaking into a zone. From either the upside or the downside, being able to understand auction market theory and being able to follow the direction or the higher time frame trend will give me the basis and the bias of the direction that I want to go. So we have marked up Google here. We can see Google's kind of in this range, right? So when we have stocks that are operating in a range, you want to be careful about how you trade those. Typically symbolic of fading the upper end back down to the lower end or buying the lower end and taking the full rotation to the upper end. So I'll keep that in mind as I'm going throughout the course of the day for Google to not be as excited anticipating a breakout to the upside, or if we get to the lower part of the zone, a breakout to the downside. We want to make sure that we are observing what the structure of the market is telling us. And right now we are in this little range. So we can leverage that as our risk management, guide, and then also just having an understanding of how the market structure looks. We would be looking at some point to a breakout. And if it breaks out, we'll let it break out, come back in and retest before it moves to the upside. Or if it breaks out to the downside, we'll wait for it to break out, come back up, retest the bottom of the zone, and continue down to try to find fuel at the next zone down at this particular level. So that's how it works. It is one of the most, kind of straightforward frameworks. I use it because it allows us to use auction market theory. It allows us to use the volume profile that shows us where business is being transacted. And it just gives you a pretty clean framework for establishing your edge. And you just need an edge in the market that you can allow to play out over and over and over again. Nope, I'm not going to make 100% on all my trades. No, I'm not going to win every trade. But as long as you have your edge and you have the ability to, kind of repeat that edge on an ongoing basis, it gives you the ability to stack probabilities on your side. So that's that. Let's go to Amazon. For those that may want to trade Amazon, and I do sometimes. Let's go ahead and capture this little area right here. And you can see this one has peaks, multiple peaks in a close proximity. So we can capture all of those if we want. And for those of you who are like, man, those zones look close together. They look close together on the 4-hour chart. When you drop down into the 15-minute chart, you can find your self seeing that these zones are giving you pretty good moves. So that's typically why it's okay to capture some of these smaller zones, because when you zoom into the 15-minute chart, which is a little more detailed, then you can see that it actually gives you pretty good range to take trades throughout the course of the day. So that's that. I'll be very mindful of Amazon taking a trade here because our moving averages are pretty flat, and that is pretty symbolic of a ranging market. So I would probably steer away from doing anything with Amazon this week. But we at least have the chart marked up. This is a swing high where liquidity might live. That's a swing low where liquidity might live, and we'll just keep an eye on that. Just off off to the side as we're observing charts. Let's take a look at NVIDIA, everybody's favorite darling. And so let's go ahead and capture. We have this high volume node here, which allows us to at least capture where we concluded last week. And then I want to capture some of the zones immediately above. So that's a zone that's immediately above. Let's go ahead and take another zone. I'm going to take this as one major zone. I see we have a gap here in between, and I'll just keep an eye on that if I were indeed to enter into a trade in that particular range. But for the most part, we're going to just operate like this. Don't have much going to the downside, but I'm just going to capture just that little small node right here, just as a downside target. And then let's go ahead and mark our liquidity areas. We have one here. We have another one to the upside here. And if we were to take the next ones, it would be here. And we have the ability to capture that external one there. So that's NVIDIA. Let's go to Palantir. Palantir, one of my favorite tickers to trade. Let's go ahead and just capture this as one big zone because there's several little gaps in between, but let's capture this as one big zone and we'll keep an eye on these little gaps if we were to enter into trades in this zone. And so we'll do that. I don't know if I like, let's go ahead and delete that. I don't know. I accidentally chose the line instead of this rectangle. And so let's go ahead and capture this. There we go. Do I want to capture this little bitty zone? Let's do it just to have it as a point of awareness. Point of awareness right here. There we go. And so I think that's it for Palantir. Let's go ahead and get our swing high, which is right here. Let's go with another swing low. Let's go right here. Kind of corresponds with the EMAs that we have plotted there. And so that's it for Palantir. Let's go to AMD, the last one that I'll mark up for today. And let's go ahead and capture this zone right there. We'll capture the upper zone or the zone right above, just so that we have it as a target to the upside. Boom. And then let's go ahead and capture a zone to the downside, which would be right out here. And then just for kicks and giggles, just capture this other one to the downside as well. That's another zone. Boom. And let's capture this highest volume node to the upside based off of the visible range, which once again plots the volume profile against all of the data points that are shown on the screen, which takes us back into October. So pretty significant amount of data points to plot out the volume profile here. And so that gives us this. Let's go ahead and do our swing high, which is right here. Capture this. Swing high. Boom. Let's go swing low. Right here is an internal one. The next major one is down to the downside, but I'll capture it anyway, way down there. So we'd keep an eye on it if we were to get into that area. So that's where we end as far as the plotting out of the zones for the day for AMD, Palantir, NVIDIA, Amazon, Google, Apple, Microsoft, SPY, and Triple Q. And as I mentioned, these zones look kind of small on the 4-hour chart, but if you were to zoom into the 15-minute chart, in those same zones that we marked out, you would be able to see, it gives you pretty good movement, right? Based off of this 15-minute. The EMAs are flat, so I'm not looking to do much with AMD based off of this chart right now until we see some more direction established. When we look at Palantir, we are looking at the EMAs that are trending upward. I don't take calls at the upper end of a zone, so I wouldn't be interested in calls until we got up to this 184.35 level. So that's that. I would only be looking for calls on Palantir for for Nvidia. The EMAs are flat. We're in the middle of a zone. I don't typically take trades in the middle of a zone. I need it to either be at the lower end of a zone or the upper end of the zone. So Nvidia is not really on my radar for today. Um, we see Amazon, the EMAs are flat. So I'm probably not going to observe Amazon for right now. Google, we talked about before being in a range. We're in the upper part of the zone, so I wouldn't be looking to do much with Google to start off the trading session today. So we got to be careful about that. I would only want to take trades in the lower part of that zone. So that's just me. Won't necessarily do much with that. We are on Apple. The EMAs are trending down. We are looking to open up in the lower part of the zone, so I want to see it kind of move and retrace back into the upper part of the zone before I did anything, taking it short. EMAs are pointing down, trending down. I would be looking to try to take a short to the downside, but in order to do so, I want to take trades in the upper end of the zone and then ride that down. So right now, I'll just be keeping an eye on it to see if there's an opportunity to see this come up into this area and then take it back down to that lower end of the zone and then hopefully targeting this liquidity right there. So that's what I would be looking at for that's what I would be looking at for the Apple chart for today. So kind of keep an eye on Apple. Let's see what will happen with Microsoft. Microsoft is on the upper end of the zone. I don't like trading the upper end of the zone. I wouldn't have an interest until we would break into this next zone to the upside, or unless Microsoft retraces down into the lower 50% area of this particular zone. So coming down somewhere around 476.49 in this range and then continuing up. It looks like it wants to break out higher. We see the EMAs now crossing based off of how Friday ended. But once again, I wouldn't have an interest in trading Microsoft until we broke out of the zone and broke into this next level or this next area up to the upside. Just because I follow auction market theory, I want to buy on the lower end of a zone. I want to sell in the upper end of a zone, and it gives me a chance to capture the full rotation throughout that zone. So that's just typically the structure and the framework that I follow, and it has done me pretty well once I got disciplined enough to follow it. Let's take a look at SPY. SPY looks like it's opening up around this area to the upside. Once again, EMAs are separating 21s above the 50. I'd wait until we got up into the zone to try to take it from here, 688, 687.79 and trying to capture it all the way up to 688.79. The only thing that gives me pause is that we would be pretty far away from these EMAs. And typically, when we get overextended, we'll find a way to pull back closer to the EMAs. So just got to keep an eye on that as we move forward as well. But hopefully, this gets you set up for Monday and being able to observe it. Once again, I don't typically enter trades until about 20 minutes into the market, allowing those initial moves to take place. Sometimes people call those fake moves or the initial fake outs or whatever, opening ranges. And if you take those, you want to take those and pretty much pivot out of those pretty quickly. But I'm not one of those types of traders. I typically just trade my zones, use the EMAs to help let me know which direction the market is moving in. I also have session volume profiles. So if I want to look at intermediate targets within these zones, I kind of allow these session profiles to help guide that as well. But for today, I think I'm going to turn those off and just kind of ride from zone to zone, the lower part of the zone to the upper part of the zone. If it breaks out, I consider that to be a home run trade. If we enter into the next zone, I'll be looking to just keep an eye on how price responds once it gets into that area, and then really just kind of moving my stop loss up so that I don't give back any profits that I may have gained as a part of a trade. So once again, hopefully this sets you up for your trading day, Monday, December the 8th, and gives you some levels to at least evaluate and observe as a part of your time in the markets today. So we will put we will call it quits there. And if you have any questions, of course, don't hesitate to reach out. I enjoy trading this particular strategy and structure and framework. It has been very clean and it works in trending markets. It also works in ranging markets because you don't necessarily have to wait until it breaks out. You can also do what is referred to as mean reversion, which means it goes to the upper extreme and then it will pull back into the kind of the value area that has been established. So you can do that as well. So this strategy works for breakouts. It also works for mean reversion opportunities as well. So take care. Have a great trading day, and we'll talk soon. Peace.